If you buy and sell Pokemon cards and you want to learn tax secrets, this video is for you. My name is Jonny Petrucco, an IRS Enrolled Agent, Quickbooks Pro Advisor, and sports card tax expert. But it's time. I need to talk to the TCG and Pokemon community. Of course, many of my sports card enthusiasts have jumped in the last couple of years. So whether you are newer to buying and selling Pokemon, of course, it's very similar to the sports card business. Or you've been exclusively in Pokemon for years. Maybe you're a collector. I love talking to collectors because this is the real hobby. But perhaps you are buying and selling to fund your collection. I have all kinds of videos on knowing a hobby versus a business. This applies to everyone. But particularly today, I want to cover 5 little tax deductions that are missed, right? These are important deductions that Pokemon resellers need to apply. And you probably are, but many people are not applying it to its fullest potential. For this first one, I want to ask a question. How confident are you? On a scale of 1 to 10, did you capture every business transaction on your taxes last year? You need an excellent bookkeeping system to make sure you catch them all. Many times people take the first step, which is excellent. Separate personal account, separate business account. Even if you're a sole proprietor without an LLC, you can still open up a separate account. But what about the cash transactions? How about the accidental business purchase on your personal credit card? I love spreadsheets. I've made some pretty impressive, crazy spreadsheets. For capturing our transactions, I like to use free software such as Wave for bookkeeping or Quickbooks. Now I have a special discount for Quickbooks. If you're wanting to jump into that, I can help you out. But mainly you're connecting your bank accounts, credit cards, and categorizing. You can train the system, the AI, the algorithm to improve your categorizing. But this is an initial step. You need the cash transactions to come in as well. And there's a proper way to do this. I'm sure, and hopefully you've already captured supplies, marketplace fees on TCG Player and eBay, shipping costs, right? These are pretty common deductions that you would be taking. But now these next 4 are also fairly common, but they are severely missed and underreported. So number 2 is inventory, right? This is actually the largest expense. And in terms of operations, there's one way of doing things, and then accounting and taxes, there's another way. So use your spreadsheet, use the best way to track and manage your inventory that makes sense to you, that's efficient to you. But then for taxes, you have 2 options. There's a cash method and an accrual method. Traditional accounting has always said COGS, cost of goods sold. For tax purposes, this means at the end of the year, let's say you've had $30,000 on new wax, slabs, singles, right? And this is in your inventory. You're not counting that on your profit and loss. You're not reducing or deducting that inventory on your taxes. That's the accrual method. For the cash method, this is a newer thing that came out in 2018, and it picked up steam and became more official over the last couple of years. But basically now you can expense your purchases when you purchase it. You no longer, if you choose this method, you no longer have to only recognize the expense when you sell something. This comes into planning. Now, it's not recommended for the best reporting, but it does give you some flexibility at the end of the year. If you had a lot more sales, you could try to purchase more to reduce and maximize your deductions. Number 3 is vehicle and travel expenses. Okay, travel makes sense. Your hotel, your flight, all of the things, even while you're traveling, your meals are 50% deductible. A couple weeks ago, I went to Orlando Collecticon, right? And I met people from Texas, California. So not only the setup fees at the show, but all of the travel expenses is deductible. Keep track of it and keep good records. There's a certain kind of way to log it, so it's audit proof. In terms of a vehicle, there's an actual and standard way of doing things. For most people, the standard mileage is the best option. Whereas the actual mileage, you can take large depreciation, you can write off your gas, but there's some nuances there, and it works for multiple people. But standard mileage can be simple and is very lucrative. For this, you just need how many business miles did you drive that year? This should be on a written log, or you can use software like Mile IQ. Business miles include driving to the post office, driving to a card show, driving to meet someone for a deal. If you own a shop, it does not include driving to your shop and back home. That's a commuting. But there are ways to kind of figure out to maximize your mileage, and then you get 70 cents a mile. So in 2025, hey, maybe you have 10,000 miles, $7,000 deduction. Number 4 is the home office deduction. Now, right away, I think a mistake, even though this is the simplest, is to use the simplified option. That gives you $5 per square foot up to 300 square feet for your home office. $1,500 sounds amazing. Whereas the actual method takes a little bit more time, but is pretty much always more lucrative. Let's say your office space is 300 square feet and your total house is 1,500. 300 divided by 1,500 is 20%. Then you total up whether you're renting, your total rent, utilities, or if you own it, your mortgage interest, right? The repairs and maintenance. So the total for the year, personally, that you're spending, say, is $15,000. $15,000 times 20% is $3,000. Now that can go up and down depending on your real expenses, but that's more lucrative usually. But the key missing is, are you including your inventory storage? Are you including, of course, your administrative space? So you want to add up those two square footages, and that'll give you your total home office. Now, the last tax secret is becoming an S corporation. This is really the strategy that even unlocks more, and it has the best initial benefit related to self-employment tax. Now, this process is when you start as a sole proprietor, you're just buying and selling. Then you make it a little more official, open an LLC, then your EIN number, that's your federal. You can open your bank account. But now you're still taxed as a sole proprietor, even though you have a LLC. You may want to look at this video that explains a sole proprietor, LLC, S Corp, and a C Corp in more detail. But using a simple example, let's say you profited $100,000 last year. We need a reasonable compensation. If you're an S corporation, I would put that at around $40,000. That means $60,000 is your true profit. And that $60,000, you are not paying self-employment tax. Previously, as a sole proprietor, single member LLC, you're paying 15% on that entire $100,000. That's payroll tax. That's in addition to your income tax. So for payroll, that's $15,000 for the year, but now you only pay the self-employment tax on $40,000. $15,000 minus $6,000, which is $40,000 times 15%. That gives you a $9,000 self-employment tax savings right there. There's a few more things to it. Technically, your income tax liability increases slightly. So overall, the net effect, I have a handy spreadsheet, but your net effect is somewhere around $7,000 tax savings. This also depends on what your accountant decides for your reasonable compensation. I might be a little more aggressive, but this also doesn't count, hey, maybe you have kids. You can pay them and reduce your tax bill. There's all kinds of other ways, but that's a very generic look into it. But nevertheless, please reach out if you have any questions. And I would like to continue making some more content for Pokemon resellers. I have some other ideas. Let me know if you have something specific I can help you with. And if you're new, how I like to end these videos is at Sports Card Tax Guy. We are helping our clients trade their IRS stress for financial success. Talk to you soon.